Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. There's always interesting flow in gold, and that's what we're going to look at today. So again, we start on the home page here, like always. This time, we will go to the ETFs. So we're going to put no spreads greater than 2 weeks. And right here, there's a filter, and we're going to use all ETFs. So we're going to click on all ETFs, and we're going to see lots of SPYs. A lot of times the SPYs drown out some of the results, so you got to dig a little bit past the first 10. You have some Jets, which is the airline, silver, which is interesting. And there we have gold. Now we can do this quickly too, to start with just the ask, and gold pops up to the top here. What is this? September 235 calls. These are a penny. To me, that's interesting just simply because it's a penny. Who sells anything at a penny or buys anything for a penny? So that's just interesting because it's gold, and gold always has that potential to skyrocket. But then if I look a little bit lower, I start seeing the 195 calls here were bought. It looks like 5,400, 5,300 times. So I'm going to take a look at gold here. And sure enough, I see some prints down here. But the big strike is the November 195 calls, 81% on the ask here. And if I look, the gold 195 calls, I see all of these prints right here. All of this. These are all gold 195 calls. Now I can look at something like this here. So I'm going to look at the time because I want to see it in sequential order here. 11:17 trades at 72 cents. At 18:30, 35 seconds later, 34 seconds later, it trades at 74 cents. At 19:05, another 35 seconds, it trades at 76 cents, then 77, 79. You see how it's going up? It's being bought 6,000, 3,000, 5,000. These are in big lots here. So someone is buying these. They're taking the offer, and you could see the volume on this line is creeping up here. Okay, so they pay as much as 83 cents. 83 cents. And the biggest print, 7,500, 7,598, almost 7,600, happened right at the end. So that means they take whatever they can here, usually from the floor. Maybe the investment bank says, I'll get you started on 5,000. They get to pick up an extra 1,300 off the floor, and then they're just taking the floor higher, 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 higher. And then eventually, maybe there was a stop. Usually what happens with these is they say, I will sell you X number of options. I know it's offered right now at 72 cents, but I'm going to stop you at 83 cents. So you probably average somewhere around 77 cents. Is that okay? And the person says, fine. As long as you're going to get me about 50,000 of these, I will pay a little bit more than 72 cents. I'll pay a nickel higher, 77 cents, 78 cents on average. And it looks like that's what they got on average, about 77, 78. So that's how the conversation goes when the hedge fund is looking to buy these. Then the investment bank, someone like myself, when I was at Bank of America, would say, I'm not going to sell you 50,000 at 72 cents, but maybe I get you started on 5,000 and I'm probably going to average you around 77, 79, stopped at 83 cents. So I'm buying for the person. And then whatever I can't buy, I will sell it to him up at 83 cents. So that's what it looks like happened here. And now we're looking at the 195. So we can go here, 195, November 195, and we have it right here. So outside of the unshaded area, in the shaded area, which is usually not the options people buy. However, in gold, there are these players in the name that are always playing this super breakout, that moment where gold is going to explode higher. And so we've been seeing this over the last 2 years where they're buying 200, 235s, 245s. Today they're buying the November 195s. But let me show you the open interest calls here on gold and take a look what we see here. So we can go up here and see this is 200. Look where everybody's at, where there's a lot of open interest in the 245 range, the 200 range. These were bought over the course of time, but they are just sitting there, probably pennies now, but they were bought for pennies. They were bought for a quarter, 30 cents. looking for that 50 to 1 play where gold breaks through the 195, 200 and takes off. That was, let's call it over the last 8 months, we've been seeing that. Now we're seeing the 195s, and you can see, you could see that this is the level they are looking for a break higher. They missed it here. They missed it here. But you could see that this has been steadily moving higher from here. And even better for the longs, even better for the longs, this little area right here probably knocked out a lot of people. If you got scared, you could have got knocked out here. Now, the volume is not terribly high, but these people, whoever sold here, was bummed out. Eventually, the stock goes, the ETF, gold ETF goes back up. They're looking for a pullback to get back in. It never happens. Goes all the way up to 182, 170, 190, 175. So you're seeing this move higher, which is fairly strong. This is a fairly strong move here, making higher highs at least twice here, once, twice, and then higher lows twice. So the next move is expected to do something like this. And if you can go the same length as that, it's going to get you above 195. If that could happen, if this could break, because this is building that momentum, then you have a breakout at the highs in gold, and you could see this thing explode another. I mean, this is 57.5 to 195-ish. So that's about 37.5 points. 37.5 plus 195 would get you closer to 230, which is exactly where all these open interests I showed you were, the 220s to 250 area. So that's what they're playing here. The 195 break, November calls. I like it. I always like gold. I think that at some point it does make a significant move. So if you don't want to play this game prior to a 195 break, then perhaps once you see a lot of volume and a close above 195, the shorts are going to have to cover here, and the shorts are constantly selling it up here. And I just think that there's a lot of room to go up, 37 points here to go up in the event that it breaks and it holds. That's what you want. You want to break, hold on volume, and then move higher. That's it for gold. That's what we're seeing. They come back every few months, but I've been seeing in the last couple of weeks, we've been starting to see a lot more of these gold, silver. Take a look at the gold silver ratio. That's actually boding well for silver. So you might see silver make a move as well. That's what I got for you today. Gold upside calls, the November 195s, trading around 79 cents, looking for that big move towards the highs and then a breakthrough. The chart is to some extent confirming the potential for that move happening in the next 8 weeks. All right. Thanks a lot. I will see you tomorrow. Make sure you smash that like button, ask questions, comments. Take care.